Now we want to calculate the net profit margin. We have the formula already. Start with the equal sign. Net profit on row number 12. Click on that number, column B, row 12. Then you divide by the top line, the sales amount. Row number 2, same column B. And then you enter. You get a decimal place, decimal number, make it percentage. And always use 2 decimal places after the dot. Now that number is only 1.21%. Last year it was 4.12%. We have completed all the margin analysis. Now we move to the return ratios. And we start with the ROIC percentage, return on invested capital. To compute return on invested capital, we have to multiply the CAT or capital asset turnover by the operating profit margin in percentage. Now to do that, we have to first have the value for the CAT. CAT stands for capital assets turnover. Is this a measure of the amount of sales revenue produced from the investor's capital? So we calculate the CAT. We need 2 numbers, the sales and the total capital amount. Sales we get from the top line, row number 2, column B, sales. We divide that number by the total capital, which is given on row number 17, column B. You divide it again, reduce the number of digits to double 2 digits, we get 1.55, which means from every $1 of capital invested in the company, management has produced $1.55 of revenue. Now we already have the capital. Now we have to compute the OPM, which stands for operating profit margin. That is operating profit we divide by the sales amount. That's equals to, we have both numbers. Operating profit is shown on row number 8, column B. That number you divide by the sales amount, and this number you make it percentage, it is 2.84. From every $100 invested in or generated by the company in terms of sales, after paying for the operations, the company has 2.84% of operating profit. That number is before tax. Now the tax amount in Thailand is 20% corporate income tax. So to make it after tax, we have to multiply by 0.8. The operating profit margin we have just calculated, which is 2.84%, is before tax. We have to make it after tax. Since the tax rate, corporate income tax rate in Thailand is 20%, we multiply this number by 0.8, and that makes it 2.27. We have that number, and we have the CAT. We multiply according to the formula. That will give us equal CAT multiplied by operating profit margin, that is 3.52%. That is how we calculated the return on invested capital, 3.52. Now I move to ROE, return on equity, which is equal to net profit amount divided by total equity. To be able to calculate the return on equity, we must have these 2 numbers, net profit and total equity. We start as usual with equal sign. Total net profit is on row number 12, column B, you divide by total equity, which is given on row number 16, column B, you enter, you make it percentage, it's 4.53%. That's the calculation for return on equity. We have done the margin analysis, return on invested capital computations, and return on equity. The data is taken from the financial report or the financial statements of the company, the income statement and the balance sheet. We have pulled out from that big report items related to only operations, and then following the formula, we have calculated the margins and returns of this company. Thank you very much.